Hello, welcome everyone. This is Seewing Yi, my co-host Richard Vanny from Guarantee Rate Mortgage. Welcome, Richard. We have a very busy day, so let's get to the point and a lot of things to discuss. Now I'm going to share my PowerPoint with everyone. The title is Have You Missed the Boat from 2019 to 2022? Let's figure it out. Richard and I, we know the markets we've been promoting. I promoted all of my markets in Midwest, South, and Southeast for many years, especially our network members. I have consulted with many of my members one-on-one back in 2019, 2020. I have qualified many of our network investors to pull the trigger as the pandemic was beginning, but most did not. Unfortunately, you can make excuses or you can make money. You cannot do both. Life got in a way. People got busy with life. They lost focus. They lost priority. They go back to their comfort zone and whatever they do, they travel, have fun, visit with kids, visit with children, cruising, vacation, whatever. And they totally lost focus. And as we fast forward to July 2023, and a lot of our investors and many other investors out there throughout the country, by not pulling the trigger 2 or 3 years ago, they have a lot of regrets. Now they're going to go back and say, oh, I could have, should have, would have, is an opportunity of a lost lifetime. Again, a handful of our investors bought from 2019 to 2022, but most did not. Let's go through what transpired. I can only go through a few samples of our markets before and after. When you watch this video, you can peel because analysis paralysis 2 or 3 years ago, preventing you from changing your financial trajectory. Let me give you an example of our marketplace before and after. For those who took action, this is the actual cases of our investors, the few that did it. For example, in Buffalo, Niagara Falls, around 2.5, 3 years ago, this is a purchase of $50,000 at that time. And the gross rent was $850. And now we fast forward to right now. And that property was, and now is 80 something thousand. So even Buffalo, Niagara Falls, some of the houses in the past few years have increased almost 50 to 80%, and the rent also increased. Let's go to the next property in LaBelle, Florida, which is the suburbs of Cape Coral, Southwest Florida. One of our investors bought a property. This is a 4-bedroom, 2-bath, 1,500 square foot in LaBelle, Florida, which is, like I said, 30 minutes east of Cape Coral, Southwest Florida. And she bought it for $165,000. She bought it in October 2020. That was a little more than 2.5 years ago. And now the rent estimate by Zillow is not all that accurate, but for the sake of the discussion, right now, the value of this very same property 2 years later is $279,000. Just so you know, Richard and I know past performance is not a guarantee for the future. Richard and I do not have a crystal ball. Everybody needs to do their own research and due diligence before they take action on their real estate holdings. All right. But I love to play this game. Let's continue to play this. All right. So in the rent at that time, when I was promoted, and this is my property tracker, I always keep track of all the properties that I promoted for our investors. I think it was, I don't know why I put down, this is 190K. This was wrong. It's 165K. At that time was renting for $1,500 in LaBelle. Now look at when I pulled the Zent rental meter, I subscribe to this software. Very nice. I pull a 5-mile radius of a similar square footage of a home, currently 4-bedroom. And the average rent right now is around $2,000. $1,500 to $2,000 in about 2 years increase in rent. This investor and some others have achieved massive appreciation, and rental raised income dramatically increased their cash flow. Look at some of the properties in this neighborhood. Some of the rents are similar square footage, maybe not similar, 1,500 square foot, almost 2,000. So this is a good range. This is a very good software. You can track the rental rates for similar neighborhood close by. All right. So let's go through another property. This one is Cape Coral. This was purchased by one of our investors. Like I said, right before the pandemic, single family home, $178,000 2.5 years ago. At that time, the gross rent was $1,500, and the cash flow was net towards 78. I know the mortgage rate at that time, Richard, you knows about it. It's around 4% for investors even. So things have changed. But let's fast forward. This is what this 178 today. This price is $306,000. Same property and almost 100% appreciation in about 2 years. Then before the rent was $1,500. Look at today's rent, $2,300, increased almost 100% in rental rate increases. Here's all the areas. Look at how many people paying rent right now. $2,000, $2,500 on a similar neighborhood close by. This is mind-boggling. And our network realtor in Georgetown, Texas, which is 30 minutes above Austin, this property I was promoted, Ken Renner and myself promoted this very same house around 2 years ago. At that price in Georgetown, $209,000. Rent was $1,650. You fast forward today, this very same house increased from $206,000 to $416,000. And the rent, as you can see, what is the rent here? $2,600 from $1,500 rent 2.5 years ago, maybe even 2 years ago. Now $2,600. And then finally, this is a VA foreclosure property, which I promote government VA foreclosures from time to time. I still do right now, as a matter of fact. But this property, none of my investors bought. Probably was maybe 3 years ago in Venice, which is an hour and a half above Cape Coral and about 1 hour below Tampa along the Gulf Coast of Florida. At that time, by the way, VA foreclosures, an investor can purchase it with 5% down as long as you have your own rental properties before. That's the qualification to get venti financing. 5% down for down payment, minimum via foreclosures, no PMI, nothing like that. Unfortunately, none of our investors bought this property 2.5, maybe 3 years ago. Was listed at $367,000. The rental rate was $2,800, and it's relatively low cash flow, $228. However, now this property, like $367K. Imagine some investor bought this for 5% down, so their total out of pocket is around $20,000 to $25,000. $25,000 total out of pocket down payment, closing costs. Someone have purchased the property for this amount, $67K, right? 2.5, 3 years ago. Now let's fast forward. This very same house right now, today, this house is by estimate around $689,000. And look at the rent. How much? What is the rent? I can't see because of the video screen. The rent is how much? The rent estimate, Richard, you see it?
$3,900.
$3,900. Now I look at the rental meter within a mile of this property. The rental meter shows the average rent like $10,000. I'm not talking about $10,000 per year. It's $10,000 per month. Now, okay, I know every house is different. Venice is a very upscale community now. The properties have doubled in value in the last couple of years only. But let's look at the rental comp within the 1 mile radius of a square footage similar to the property we just shown, around $6,500 per month, same square footage. But I'm not going to go over the $16,000. This is a vacation rental, a different kind of house, anywhere from $6,500 to almost $10,000 per month rental on that property. Imagine someone bought, I wish I could have bought, but someone would have made a 1,000% total ROI have they bought it. The bottom line is, let's recap this. Richard, I'm going to have you share your thoughts. Some of the investors, when they watch this video, they're going to say, Seewing, I know what you're thinking. Oh, these prices can't sustain itself. Oh, the market is overheated. Sorry to burst your bubble. Listeners out there today, these areas will be fine because these areas I just show you still are going through a record low supply of inventory, and the demand is still very high, even though we are looking at elevated 7% mortgage rate as we speak, because these areas of Texas and Florida are still having very strong job and population growth for a very long time to come. However, Richard and I know what's going on because we work the same market. I'm taking my investors to move inland, to move even further away to the emerging market, further away from the main metros. I describe it as a new frontier. Star Trek, the Star Trek theme song, New Frontiers. Yes, I'm taking my investors in California, especially all the deep submarkets an hour away from main metros of Tampa, of Cape Coral, and Jacksonville, and Central Florida, way away, even deeper into the path of growth than we have gone before. New Frontier, Star Trek, another movie. Richard, you may be too young. Remember the movie 1989, The Field of Dreams by Kevin Costner? One of the things he says, you build it, he will come. The builders are building at the new construction in big Florida and Central Texas. When those builders build those new homes for investors, you build it, he will come. Investors will come, migration will come, renters will come to rent your houses. Do not make the same mistakes So that's my recap. Thank you so much, Richard Avani. Thank you for your great analysis. With that said, nothing more we need to say. Hopefully you enjoyed this presentation. And this is Seewing Yi and Richard Avani. Thank you for watching. We'll see you next time. Have a nice day. Bye-bye.